You know, if there's one truth that trading has drilled into me more times than I can count, it's this. The market doesn't pay you for activity. It pays you for alignment. Alignment with opportunity, with probability, with your plan. And sometimes that alignment means doing absolutely nothing. That's the hardest lesson of all. Do you see what I mean? Everyone wants to trade. Everyone wants to feel in control. But the market isn't a machine you conquer. It's a mirror that reflects your state of mind. And mastery of trading means mastering yourself, especially your impulse to act when no real opportunity exists. You don't get paid for being early, and you don't get paid for being late. You get paid when your beliefs, your actions, and the market's reality all align in the same moment. So why do most people fail at this game? It's not because they can't read charts. Many can. It's not because they lack capital. Often they have plenty. They fail because they cannot wait. They can't stay neutral. They must act to relieve the emotional tension of uncertainty. That need for action, that compulsion to do something, is pure poison in trading. Have you ever stared at a chart thinking, maybe I'll just put something on so I'm not missing out? That's not intuition. That's fear and impatience disguised as logic. Early in my career, I thought trading meant cleverness, catching every move. I was reacting, not observing. I'd win some, lose some, and by week's end, I had nothing but emotional fatigue to show for it. That's when it hit me. The real edge isn't in the trading, it's in the waiting. The emotional discipline to wait for genuine probability. Strange, isn't it? That doing less can lead to earning more. But it's true. The market punishes neediness. If you chase, you pay. If you predict, you pay. If you force, you pay. But when you wait, calmly detached from the outcome, you let the market come to you. You align yourself with flow instead of forcing it. That's when the odds quietly tilt your way. The trick is accepting that you don't have to trade every day. The big gains don't come from constant motion. They come from high probability moments. And those moments don't appear on your schedule. They appear when the market offers them. Until then, you wait. Think of setups like opportunities that flow through time, like trains on a schedule. Miss one, don't chase it. Another will come. But you must know what train you're waiting for, what conditions define your edge. Most traders don't. They see every flicker of price as a signal. That's not trading, that's gambling. And gambling's what traders do when they can't stand uncertainty. You wouldn't sit in a casino and play every hand thinking you'll beat the house, would you? Yet people do it in the markets every day. My best trades, the ones that transformed my equity curve, didn't come from luck. They came from discipline, from clarity, from knowing my edge and waiting for the market to align with it. Until then, I did nothing. That's what most can't accept, that waiting is the real work. Waiting is discipline in action. Waiting is emotional control. Can you sit in front of a chart and not trade? Can you let uncertainty exist without needing to resolve it through action? That's the real test. I used to think I had to catch every swing, every uptick, downtick, sideways drift. And you know what that got me? Overtrading, frustration, and losses. Then one day it clicked. I didn't need every move. I just needed the high probability part of it, the fat pitch, as Mark Douglas would call it, the area where the odds were clearly in my favor, and my mind was free of emotional bias. That was my turning point. The market always offers opportunities, but not all are equal. Some are noise, some are traps, but a few are pure alignment, where edge, emotion, and structure meet. You must learn to wait for those. Charts are your map, but your mindset is your compass. Charts show where price has been, but your perception determines what you see. A setup isn't a prediction. It's a probability pattern, a context that slightly tilts the odds in your favor. Maybe it's a breakout, a retracement, or a surge in volume. But unless your mind is clear, you'll see what you want to see, not what's actually there. Impatience creates illusion. You start forcing meaning where none exists. The market doesn't reward almost setups. It rewards alignment. Either your edge is present or it isn't. When it isn't, you wait. That's what separates a professional trader, one who thinks in probabilities, from an emotional one who trades to feel safe. Let me tell you something. I once waited weeks for the right pattern to form. Every day it teased me with movement, but I stayed out. Others said I was missing money, but I knew trading from need is trading from weakness. Then, one day, all conditions aligned. Volume, structure, momentum, everything matched my plan. I executed without hesitation because I'd prepared while I waited. That one trade outperformed dozens of impulsive ones. That's the paradox. Patience multiplies opportunity, while impatience destroys it. Patience in trading is psychological capital. Every trade you don't take out of boredom preserves your confidence, your clarity, your capital. The market constantly tempts you with half signals and emotional noise, but your job isn't to react. It's to respond only when the edge is real. Just like in poker, professionals fold far more than they play. Folding isn't losing, it's preserving. In trading, restraint is strength. Wealth in this business doesn't come from a flurry of trades. It comes from consistent execution of your edge, from compounding results, from avoiding the big emotional mistakes that erase months of progress. And what causes those mistakes? Impatience. The need to trade when nothing's there. The urge to double down after a loss. The fear of missing out when a move has already run. That's emotional trading. And emotional trading always extracts a price. Have you ever chased a breakout thinking you're catching a wave, only to watch it reverse and burn you? That's not bad luck. That's trading from fear, not from probability. A trader's greatest asset isn't his intellect, his chart, or his strategy. It's his ability to stay mentally neutral, to wait without needing. Without patience, your system is useless. You could have the most precise methodology in the world, but if your psychology can't wait for confirmation, it's all for nothing. Think about your last few losses. Were they really due to the market's behavior, or your inability to stay patient? Most traders don't lose because they lack skill. They lose because they can't tolerate uncertainty. They mistake movement for progress. But in trading, less really is more, provided you only act when your edge is truly present. So I'll say it again. Learn to wait for setups. Train your perception. Understand your edge so deeply that you can recognize it instantly and ignore everything else. Sit in the uncertainty until clarity emerges, and when it does, act with total confidence. That's trading. That's how you build consistency. Don't mistake waiting for laziness. Waiting is active. Waiting means preparation. It's observing, noting conditions, reviewing probabilities, and staying present without expectation. Because when the market aligns, there's no time to hesitate. You must be centered, ready, confident. That's the balance. Too early, you're forcing. Too late, you're chasing. In sync, you're flowing. The only way to catch that rhythm is to master the waiting. Trading isn't about intelligence. It's about emotional stability. The market humbles the smartest minds, but it rewards the emotionally disciplined. The trader who waits for his moment, detached from outcome, will always last. He's like the batter who ignores every pitch outside his zone and waits for the perfect one. Then, and only then, he swings with conviction. So ask yourself, are you swinging at every pitch, or are you waiting for your pitch? That's the question you've got to answer. Because here's the truth. The market doesn't care about your opinions, your needs, or your hopes. It's completely indifferent to your emotions. It doesn't care that you want to make money or that you need to be right. The market only reflects behavior, probabilities, not certainty. You can't impose your will on it. You can only align with it, and alignment happens when your actions are consistent with reality, not your desires. That alignment begins with patience, the willingness to wait for genuine probability to appear. You might think waiting is dull, but tell me, is there anything dull about executing flawlessly and watching a trade unfold exactly as planned? Is there anything boring about being in sync with the market while others are confused and reactive? That satisfaction, that confidence, comes only from the discipline of waiting. Boredom in trading is the emotional cost of success. Can you handle that silence? Can you stay centered through slow days without reaching for excitement? If you can, you have a real edge. If not, this game will eat you alive. I used to watch the crowd. They crave excitement, constant chatter, quick trades, the illusion of control. But that craving is the very reason they lose. They're addicted to stimulation, not performance. They equate movement with opportunity, and they can't stand uncertainty. So they act, and acting from fear, from need, from impatience, that's how they destroy themselves. If you want to win, you must detach from that energy. You must learn to think differently, to act differently, to be different. Remember this, if most people lose, logic says you must operate in the opposite mindset. And the opposite mindset is calm, focused, patient. Real wealth isn't built in the noise. It's built in the rare moments of clarity when everything aligns, structure, energy, conviction. The big money isn't in chasing every tick. It's in identifying a move with high probability and having the presence of mind to ride it without interference. But to do that, you first must wait for it. Most traders can't wait. They need the feeling of engagement. They need the illusion of progress. And that very need blinds them to the few real opportunities that matter. So I ask you, do you want excitement or consistency? Do you want to feel right or be right? Because you can't have both. Trading for stimulation is emotional trading. Trading for probability is professional trading. Every day, the market whispers tests into your ear. Here's a little move. So, do you want it? Here's a false breakout. Will you chase it? Here's an almost setup. Will you jump early? And every day, your discipline, your ability to stay objective, is tested. Whether you pass or fail those micro-tests determines your entire trajectory in this business. The hardest lesson is realizing that activity doesn't equal progress. You don't need to be active to be profitable. You don't need to be clever to be successful. You need to be emotionally neutral, patient, disciplined, ready. The setups will always appear. The market never stops offering opportunities. The question is, will you still have the emotional capital, the clarity and confidence to act when they do? Or will you have wasted it chasing low-quality trades just to feel involved? That's the choice every trader faces every single day. When I talk about folding weak hands, I'm talking about emotional restraint, protecting your capital and your confidence for the high-probability moments that matter. This business is psychological poker. The losing player thinks being in the game all the time is strength, but it's actually compulsion. The winning player folds most hands because he knows success isn't measured by frequency but by selectivity. That's the difference between chasing and waiting. Between ego and edge, trading is survival first, profit second, and survival depends on your ability to protect your stake. Every dollar thrown at a poor setup isn't just lost money. It's lost opportunity, lost flexibility, lost self-trust. Think about that for a moment. You have limited capital, both financial and emotional. Waste it on weak trades, and you'll run out before the real move begins. That's one of the greatest overlooked truths in this business. The market doesn't reward persistence, it rewards alignment. And alignment only comes to the trader who cannot act when there's no edge. Probabilities don't favor the one who forces. They favor the one who waits. I've watched traders behave like gamblers, jumping into every flicker of movement, thinking that constant action somehow earns them an advantage. But this isn't a casino, and you're not battling luck. You're engaging with human emotion, yours and everyone else's, expressed through price. And when the market doesn't align, when the structure is unclear, when emotion clouds the picture, the professional steps back. He folds. He protects himself. Can you do that? Can you let the market move without needing to participate? That's the true test of mastery. Preserving capital isn't just about keeping money, it's about preserving your state. Every loss chips away at your confidence. Every emotional trade weakens your focus. It's not the money that hurts, it's the mental erosion that follows. And that erosion leads to revenge trading, to chasing, to doubling down. That spiral begins with one weak hand you refuse to fold. I remember the times when I had cash ready, and the chart tempted me. It looked almost right. The old me would have taken it. 9 out of 10 times it cost me. The newer me learned it's better to look foolish in cash than trapped in a bad trade. That's power. Cash is power. Patience is leverage. A bad trade is weakness. Every time you refrain from forcing, you strengthen your foundation. Every time you act out of impulse, you erode it. Most traders hate the sidelines because they confuse inactivity with inefficiency. But in truth, cash is a position. Sometimes the strongest position you can hold is no position at all. Cash is optionality. It's the fuel that allows you to strike when probability aligns. If you exhaust it, chasing randomness, you'll have nothing left when the true move arrives. You can't and shouldn't catch every move. The market is filled with deception, half signals, fake breakouts, emotional noise. If you try to engage with them all, you'll bleed out slowly, one small loss at a time. Folding weak hands means letting go of your ego's need to be right. It means understanding that trading isn't about participation. It's about precision. Does that bruise your pride? It should. Because trading has nothing to do with ego. It's about discipline and self-awareness. The biggest trades of my career, the life-changing ones, only came because I had the capital, the clarity, and the composure to act when the edge was undeniable. And the only reason I had those things was because I didn't waste them on weak setups. Folding isn't missing out. It's preparation. It's how you build strength for when opportunity finally appears. You don't build wealth chasing scraps. You build it catching the main course. But you can't catch the main course if you've already starved yourself on noise. Small losses seem harmless, but they're habit-forming. Each impulsive trade strengthens impatience, and each disciplined fold strengthens clarity. Which habit do you want to build? Which habit will make you consistently profitable over time? Folding weak hands is not just about money, it's about protecting your future self. You never know when the next true edge will emerge. Maybe tomorrow, maybe weeks from now. But when it comes, you'll need resources, capital, confidence, composure to seize it. How many times have you looked at a perfect setup and thought, if only I had the funds to take it? That's the punishment of impatience. The market doesn't wait for you to rebuild, it rewards those who preserved. When the opportunity arrives, it moves on without mercy. It rewards readiness, not regret. That's the brutal truth of this game. Can you face it? Look at the crowd again. They always need to be in. They can't fold. They chase, they hope, they cling, and they lose. To stand apart, you must think and act differently. You must fold when they act. You must pause when they rush. You must wait when they grasp. That's how you stay in the game long enough to win it. Every fold is an affirmation. This isn't my trade. That's control. That's power. The amateur thinks restraint is weakness. The professional knows its strength. I've sat for weeks, even months, without placing a single order. People said, "You're missing the action." But I wasn't missing anything. I was maintaining alignment, protecting my energy, and waiting for the moment that matched my plan. And when that moment came, I moved decisively and confidently. That's the difference between reacting and mastering. Reactors nibble and fade. Masters wait, then strike hard when probability peaks. Weak setups whisper in your ear, "Maybe this time." They lure you with almosts. But almost doesn't pay. Almost is emotional noise dressed up as opportunity. Almost is how brokers get rich and traders go broke. Folding weak hands means you understand the essence of trading, psychology. That clarity comes not from acting, but from waiting. It's either right or it isn't, and when it isn't, you hold your fire. Isn't that the simplest rule? And yet the hardest to follow. Preserving capital isn't glamorous. It doesn't excite your emotions or give you that rush of adrenaline. Folding a weak hand doesn't make your pulse race, but it's the practice that separates those who endure from those who self-destruct. Excitement belongs to gamblers. Consistency belongs to traders. And consistency is built on emotional control, on discipline, patience, and the strength to walk away from uncertainty so you can engage with clarity. The beauty of this principle is that it never expires. Markets evolve. Technology changes. Volatility shifts. But the psychology of self-control, of protecting your edge, is timeless. It worked a century ago, and it will work a century from now. Because it isn't about charts or tools, it's about human behavior. Human nature is impulsive, fearful, greedy. Preserving capital by folding weak hands is the antidote. It's the one edge you can always command. So I ask you, when you see a chart that looks tempting but not quite right, what will you do? Will you step back or step in? Will you protect your capital or feed your need for action? That decision, repeated again and again, defines your future in this business. When I say that preparation during waiting is as important as execution during trading, I mean it quite literally. People think waiting means doing nothing, as if being out of the market is wasted time. But waiting, done correctly, is the most demanding work of all. Waiting is studying. It's sharpening your perception. It's conditioning your mindset so that when the market finally aligns, you act fluidly, not fearfully. Do you think consistent traders just wake up, click buy or sell, and stumble into profit? Of course not. Their success is built in the unseen hours, the silent time they spend observing, recording, analyzing, and preparing. There were entire days when I didn't take a single trade, not one. To outsiders, it looked like inactivity. But internally, I was working. I was watching price behavior, marking levels, understanding how a market breathes, when it feels heavy, when it feels light. That's preparation. So when the real moment came, I didn't need to think. I just executed, because I'd already done the thinking while I waited. That's what Mark Douglas meant by trading in the zone, acting without hesitation because your preparation has removed uncertainty. Can you see why waiting must be active, not passive? Preparation builds conviction, and conviction eliminates doubt. Without preparation, even the best setup feels uncertain. Think about it. If you haven't done the work, if you haven't watched the rhythm, the ranges, the volume, then when the moment appears, you'll hesitate. You'll question yourself. You'll trade small when you should trade big, and hesitation costs money. But if you've used your waiting time wisely, when the signal fires, you act immediately with confidence. Isn't that the edge you really need? Many confuse patience with laziness. They say, I'm waiting for my setup, but they do nothing in the meantime. Then when the setup appears, they're unprepared. They hesitate, miscalculate, mismanage. That's not patience. That's neglect. Waiting isn't an excuse to be idle. Waiting is the real work. Do you understand that difference? Let's take an example. Suppose a stock is consolidating for weeks. The amateur waits by ignoring it, hoping one day to notice a breakout. But the professional studies it daily. He tracks the tightening range, the volume behavior, the subtle shifts in demand. When the breakout finally happens, he's ready. He knows exactly what price matters, how much he'll risk, where he'll exit. The amateur acts out of surprise. The professional acts out of preparation. Who do you think profits more? The one who waited passively or the one who waited actively? Execution is fast. It takes seconds to click the button, but the foundation for that one click takes hours, days, even weeks to build. Preparation makes execution effortless. Without it, execution becomes guesswork. How many times have you entered a trade just because it looked good without doing the groundwork, only to watch it fail and wonder why? That's the cost of unprepared waiting. The market rewards readiness. It punishes carelessness. Setups often appear unexpectedly. If you haven't prepared, you'll miss them. Or worse, you'll enter late and emotional. But if you've been working quietly during the waiting, you'll spot them instantly and act decisively. That's the difference between catching the start of a move and chasing it after it's gone. And there's a mental side to all of this. Waiting without engagement breeds boredom. Boredom breeds impatience. Impatience breeds mistakes. But waiting with purpose keeps your focus alive. It turns stillness into skill building. Instead of staring at screens hoping something happens, you're studying patterns, reviewing probabilities, refining your response plan. That's how you keep your edge sharp. Can you see how this turns waiting from torture into training? The truth is simple. Money in trading doesn't come from trading more. It comes from trading better. And trading better comes from preparation. Every great trader I've known spends far more time studying than executing. Their quiet hours build their readiness, their plans, their confidence. When you see them trade without fear, it's not instinct, it's training. Preparation creates calm. Think of a soldier on the battlefield. He doesn't win by firing at everything that moves. He wins because he trained before the battle, because he knows his terrain, his weapon, his plan. By the time the fight begins, half the victory has already been earned. Trading is no different. Do you really believe you can win against collective psychology without that kind of training? Preparation also protects you from deception. The market is full of traps, false breakouts, emotional head fakes, manufactured moves. If you haven't prepared, you'll fall for them. But if you've studied price behavior and marked your levels, you'll recognize when something doesn't align. You'll step aside instead of stepping in. That's the difference between the trader who gets caught and the one who waits for confirmation. And preparation isn't just about charts. It's also mental, preparing your risk parameters, your expectations, your emotional responses. Before you enter a trade, you should already know where you'll exit if wrong, where you'll take profit if right, and exactly how much you're willing to risk. You don't figure that out after you enter. You define it during the waiting. That's how you turn uncertainty into structure. So when the signal appears, there's no hesitation, just action. Doesn't that make sense? Most traders don't fail because they can't find setups. They fail because they don't prepare for them. They enter without context, without clarity, driven by emotion. And the market punishes that every time. If they used their waiting time wisely, they'd avoid most of their mistakes. But they confuse flat with idle. They let boredom turn into recklessness. And that's what destroys them. Preparation builds patience. The deeper your involvement in studying and planning, the less temptation you feel to chase noise. You know what your setup looks like. You can recognize everything else as irrelevant. That clarity gives you the strength to say no. Isn't that the real key? The ability to say no to mediocrity because you've defined what excellence looks like. Preparation also breeds discipline. The more time you invest in your process, the less likely you are to betray it. If you've spent days aligning your plan, you won't waste it on impulse. You'll respect your own work. But if you haven't prepared, every fluctuation becomes an invitation to act. And that's chaos. I've seen it countless times. Traders stare at screens for weeks doing nothing productive. Then the market moves and they jump in blindly, oversized, unplanned, emotional. And when it reverses, they panic. They lose not just money, but confidence. Contrast that with the trader who used his waiting wisely. When the move came, he was composed. Win or lose, he acted with purpose. Who do you think survives? Execution gets the spotlight, but preparation does the heavy lifting. You don't see profits build during waiting, but they're there. Hidden in the discipline you're strengthening, the mistakes you're avoiding, the focus you're refining. Those invisible profits show up later in the smoothness of your execution, the clarity of your decisions, and the growth of your account. The market tests you daily, not just through price, but through patience. It tests whether you can wait, whether you can prepare, whether you can remain composed when nothing's happening. Most fail those tests because they see waiting as wasted time. But if you redefine waiting as working time, you pass. And passing that test is what keeps you in the game long enough to win. Wealth is built as much by avoiding unnecessary trades as by executing winning ones. That sounds simple, doesn't it? Yet most never internalize it. They think success comes from doing more, from stacking trades like bricks. But wealth in this business isn't built by what you add, it's built by what you omit. Every unnecessary trade you skip is an act of growth. Every weak setup you reject is a brick of protection added to your foundation. When I look back at the trades that built real wealth, they weren't the result of constant activity. They came from selective activity, from saying no more often than yes, from refusing to mistake action for progress. You may not see it now, but restraint is the most profitable skill a trader can master. How many times have you thought, I just need to trade more to make more, only to end with less? That's the trap. The market doesn't reward effort. It rewards precision. Unnecessary trades are like termites in your foundation. Each seems small, but together they hollow you out. You don't notice the damage until your structure collapses. That's what happens when you trade without standards. A small loss here, a small drawdown there. It feels harmless. But soon your best trades are buried under the weight of your avoidable ones. That's the cruel irony. It's not that you didn't have winners. It's that you diluted their power by entertaining too many losers. There's a kind of wealth that comes not from addition, but from subtraction. Subtracting noise, weak setups, and impulsive trades. When you strip away the unnecessary, what remains is clarity, focus, and consistency. Wealth isn't built by grabbing everything that glitters. It's built by filtering until only the true opportunities remain. Do you think a jeweler keeps every stone he finds? Of course not. He examines, rejects, refines, until only the flawless gems are left. That's what a real trader does with his setups.